accent. So that is why international valuation standards, when you read, you will feel comfortable with the language, the way they have actually drafted it. Unlike you read a prescription by a US body. Now, I want to make one more observation here, that United Nations, especially the Department of Economic and Social Affairs, they have recognized international valuation standards. Now, I must bring to your kind attention. I will take you to the standards part. Yeah. So this is your 2022. This is your 2017 standard. This is your first standard. Okay. So 2017. This is your version 2, 2020 standard. This is your version 3, 2022 standard. If you look at this, the entire standard is divided into 4 parts. 4. Okay, so like you have this x-axis and y-axis, you'll have 4 quadrants. So here also there are 4 dimensions. Glossary, you can't miss this glossary. Now I'll be referring to the connect between international valuation standard and the Desi valuation standard, which is ICAI valuation standard. As of today, the one and only standard, the valuation standard which has been prescribed in India is the ICAI valuation standard. There are possibility of having a Indian valuation standards. So we have to wait for some more time. Maybe if pandemic was not there, we would have witnessed by this time. So the part 1 is glossary. Part 2 is framework. Part 2 is framework. And there are very many places where we will be referring to framework also. No, what is this? I will directly go to standard. No, many places you have to refer framework. For example, there are prescriptions where I, as a valuer, may not be competent or having experience. Forget about qualification, because nowhere the standard use the word called qualification. You are qualified, then you can do valuation. No, they use a word competency. They use a word experience. They use a word skill. Okay, so I will call this as, in short, called SEK. So skill, experience, and knowledge. It is not qualification. So there are assets where I may not have the requisite skills, adequate experience, and the fundamental knowledge to do the valuation. Example, I have been asked to do the brand value. I have been asked to do the valuation of an intangible asset. I have been asked to do the valuation of coal. Okay. So, you know, coal is not, it will always be in heaps. So it will be like a pyramid. So you have to go by some, okay, I have already done the inventory valuation of a departmental store. So I am capable to do the valuation of a coal. No, it is not so. Coal valuation is totally different. So I will take can I take the help of an experienced valuer? Framework gives you that comfort. Framework gives you that comfort. Now come to the framework gives you that alternative. So they prescribe, you have to, if you look at this particular paragraph, if a valuer, the paragraph starts with the word if a valuer does not possess. So para number 50.2 framework. 50.2 para. If a valuer does not possess any of the necessary SEK, that is skills, experience, and knowledge, It is acceptable for the valuer to seek assistance from specialists. Good. Now, I was referring to the 4 parts. So part 1 is your glossary. Part 2 is framework. Part 3 is your general standards. Part 4 is your asset standards. Now, I must mention one point here to all of you. This is your 2020 standard. Look at this 2020 standard and look at this 2022 standard. Wow. So, as far as general standard is concerned, there is no change, but don't jump to conclusion that there is no change. Inside the standard, they have made some changes. I'll come to that. Come to the asset standards. This is your 2020. So 200, 210, 220. So in 2 series, there are 3 standards. 3 series 1, 4 series 2, 5 series 1. So totally 7 standards. But look at 2022, we have 8 standards. In 2 series 4. So you have a completely new standard introduced. Now I have to refer one very interesting point here. Compared to 2017, 2020 standard they have introduced new. Please look at this. Here, 2017 to 2020, 210, 200. So in 2020, they introduced 220, which is non-financial liabilities. Very important standard applicable for all the asset class. Whether you are plant and machinery, whether you are in land and building, or whether you are in SFA valuer, all the 3 is equally all the 3 asset class non-financial liability is applicable. And today, the UN is very much focusing on SDG, Sustainable Development Goals. So therefore, this is very, very important standard. And all these years, there is a lot of question with respect to inventory. Inventory valuation, who will do? Is there any standard? Will inventory valuation will come under plant and equipment? Where is inventory valuation? But there is a lot of work, and a lot of money is also involved in it. Okay, whether valuation wise and also professional fees wise. So in 2022, IVS 230 inventory. And you need to understand one thing, guys. Recently, Institute of Chartered Accountants of India, they have also, and also ICVA Valuation Standards Board especially, they have brought out a technical guide on inventory valuation in sync with IVS 230. So you have an international standard, you have a Desi version also parallelly. Okay, so one by one. Since this is only a 60-minute capsule, I am only giving you a trailer. Okay, picture abhi baki hai. The main picture is abhi, it's still there. Okay, good. So now you have understood one thing, that there is one full-fledged standard has been introduced. So meaning every time when they bring a version from 1.0 to 2.0, 220 was introduced. From 2.0 to 3.0, 230 is introduced. Okay, good. Now come to this glossary. Now, what is this definition? Why is it so important? Yes, important. And I want to make one observation, that is with respect to ICVA evaluation standard. Okay. In ICVA evaluation standard, you will be not surprised. Why? Because they have a separate standard for definitions. So here it is glossary, there it is standard 101. You will be surprised actually. So this is your framework. Framework is anyhow, it is, you can compare that. But look at the standard itself. They have brought a separate standard for a definition. So I must appreciate the vision of ICAI valuation standard, which is 101, which is full and full definitions. And you will be surprised. You know how many definitions they have? They have close to 47. There are 47 definitions. But look at your 2020 glossary. In 2020, there are only 19 definitions. Only 19. So your IVS 2020 has how many definitions? 19. But look at the maturity of IVS 2022. They have now, this is IVS 2022. Now they have defined 33 standards. 33 definitions. So IVS 2022, it is 33. Wow. Even then, they are not close to ICA valuation standards 101 definition, because they have brought out 47. Whenever I draft a valuation report, I always keep the ICA valuation standards as well as international valuation standard. There are certain places, certain definitions are common in both. Certain definitions are not there in international valuation standards, but they have brought in ICA valuation standards. Now, I want to make one observation here. What is this? It was only 19 definitions. You will appreciate what are those additional 14 definitions that were brought. Let me take you to those additional 14 definitions. Okay. So number one. Okay. So you can have this parallelly. So you can, I always request you, don't read these standards from what do you call it as soft copy. Have a physical copy. Okay. So you have, this is your 20, this is your 2022. And try to actually read it. Have a notes, your own notes, you try to write it down. So then only it will be registered in your mind. Okay. So we have a very senior valuer, Mr. Shah is very keenly watching with this video on. I must really appreciate Mr. Shah. Good. Now, what is the first definition which has been introduced in 2022? That is your basis. This is not there in your 2020. Look at this. Only after assets it has gone to client. B is not there because it is in ABC. So basis of value or basis of value. But I must tell you that in your ICA valuation standard, they have defined base, they have defined premises. Okay, everything they have done. So as is, where is, basis, and here also they have not tried to define basis, but premise is being defined. So they have defined premise also in IVS 2022. Look at this, premise. In IVS 2020, premise was not defined. But in IVS 2022, the word premise has been defined. So they have brought it slowly one by one. Now I need to appreciate your, you need to focus one point here. That fundamental premises on which the reported values are will be based. I want to bring to your kind attention. Okay. So what is it? You have the IBBI, the caveat and disclaimer, which has been brought out on 1st of September 2020. So in this, you have in page number 4, the contents of valuation report. In the contents of valuation report, they have made it very clear that you have to give the basis and you have to give premises. Very clear. Very clearly they have given this content. So it is very important that we know what is basis. Now when you say basis, multiple means basis, single means basis. What is a base? A base is what is the type of value you are going to adopt? Whether it is a liquidation value, whether it is fair market value, whether it is fair value, whether it is market value, whether it is investment value, whether it is synergistic value. Some of the values are defined, okay, in 104, because 104 is exclusively basis. So that is why this is very, very important. In some jurisdiction, it is also called as standards of value. Okay, good. So point number 1, 20.2 para, basis of value is being newly added. Second, cost. You need to understand cost is not defined at all in IVS in the past. Okay, so cost method, I must take you to a paragraph, especially in general standards 105. In 105, you have all the three methods: income approach, the market approach, and the cost approach. You will be surprised there. What is cost approach they are explaining? What are the methods in cost approach they are explaining? But what is cost has not been defined. Okay, so what should be included in cost has been there. So that is why this is very important. Consideration or expenditure. You need to also appreciate one thing. You have that consideration or expenditure will also include notional cost. The notional cost concept is discussed in the valuation standard, especially in 105. So that is why para 20.4 is cost is an important definition. Then discount rate. This is a new definition. You have to only start from this. So it has not, you will be surprised that in 2020, I repeat guys, in 2020, they have amended, I repeat the word, they have amended especially the 105. In 105, there is one paragraph which particularly explains in detail about discount rate. That is para number 50.29 to 50.40, which was introduced. Discount rate, how will you calculate discount rate? Can you, because discount rate is actually a arithmetical calculation. And why do you have to take this? What are the factors you will consider? What are the various methods in which you can calculate discount rate? You will be surprised. This discount rate, the method what they have prescribed is only illustrative, not exhaustive. They say you can use CAPM, you can use WAC method, you can even use an observed method. What you call observed means using, you have to observe. In this company, what is the rate used? In that company, what is the rate used? Take, maybe you can, whichever is very close to your company, take that, because the risk and return, what they have adopted. That also is suggested. But that is, whatever the method they have suggested is only listed, not exhaustive. And they have introduced this entire section, 50.29 to 50.40. This is in 2020. And they have retained in 2022 also. But nowhere they have defined discount rate. Okay. But in 50.29, they say the rate at which the forecasted cash flow will be discounted. That is what they say. But what is discount rate? So the rate of return used to convert a monetary sum in future into present value. Very simple definition only. Okay. So discount rate is your next definition. Then what are the other definitions you have? Equitable value. For your information, equitable value is defined in 104. Okay, equitable value is defined in 104. Estimated price, willing parties that reflect interest in those parties. Now, what is this word equitable value means? There are other terms also for equitable value. And I will take you to the page, I will take you to 104. In 104, para number 50, I want your attention to para number 50. It has been defined there. So they have only repeated it. Cost is not defined. Discount is defined, but a shorter version is given here. Equitable value is defined in para 50.1, repeated. They only repeated here. So 20.6 is nothing new, but it is only duplication. Okay. Now, I want to make one more observation that ICA valuation standards in 101, why they have brought definitions, so that you capture every time you go to the first standard, you refer it, and that definition is also repeated in the respective standard also. So it is a practice followed by ICA Valuation Standards Board through its valuation standard, and International Valuation Standard is also acknowledging it. Good. This is another one. And fair market value 20.7 FMV, which is also defined in 104. 20.8 fair value, which is also defined, same is defined. So it is only, so your equitable value, fair market value, fair value, all are already defined. So nothing new they have brought here. Only thing is they have added it exclusively in glossary. Then 20.11, which is investment value. This investment value is also defined in 104. So for your information, in 104, the information value, the investment value is defined in para 60. Para 60 is defined there. So therefore, it is also a repeat only. So not new. Then liquidation value, 20.13. So liquidation value, for your information, liquidation value is also defined in 104. And I'll give you the para number. The liquidation value is defined in para 80 in 104. Okay, so it is only a repeat. So they are market value, 20.14. For your information, market value is one particular definition. I really appreciate, not all definitions have been dissected like the definition that is explained in International Valuation Standard. I would have really appreciated International Valuation Standard if every definition was dissected like how the market value has been defined. Exceptionally brilliant way of, I will always recommend anybody, what is market value means, refer IVS. Because to that extent they have dissected every word. Estimated amount separately defined, asset separately defined, liability separately defined, exchange separately defined, valuation date separately defined, willing buyer separately defined, willing seller defined, arm's length transaction defined. So the kind at which so this is para 30 of 104. Same, repeat. Then price. This is one thing I want to bring your attention, guys. Price is actually 20.18. This is a new definition. Compared to 2020, we didn't had a definition before. Now, there is a difference between price and value. Price is what you pay, value is what you get. So, the monetary or other consideration asked, offer or paid, which may be different from the value. See, very clearly, this is one new definition you need to appreciate, because here they have made it very clear. Price is may be different from a price. You give a valuation report, price can be based on the valuation report. The price will be equal to the valuation, what you have given. The price can be lesser than the valuation, what you have given. Price can be greater than valuation, what you have given. Price is different. Price is different, value is different. But that is why they use over the may be different from that. It should not be equal. Okay, it may be different. So this is totally a new different definition. I will actually take you to the other part, that is synergistic value. This is also equally important. Why? Because this is also defined in 104. For your information, guys, synergistic value is defined in para 70. Para 70, 104, synergistic value. So the synergistic value is also repeat only, para 70, 104. And you have, I think I must really appreciate this, valuation approach and valuation method. This is your 105. There they have defined or explain very clearly what is meant by valuation approach in para number 10. In para number 10, they have explained what is valuation approach and valuation methods. So, but it is a very detailed definition, especially para number 10.1. So this 20.25 is a simplest definition for approach. I will always make this point very clear. First, the purpose. Second, the base. Third, the premise. Fourth, the approach. Fifth, the method. This is your hierarchy. So, valuation approach. This is a new definition. So, what is your definition? In general, a way of estimating value that employs one or more methods. A way of estimating value. It is a way by applying methods. So, approach, under that you have methods. So, 2026, that is also not been defined previously for your information. Okay, 20.26. What is it? Valuation method. Now here, they are very clear that within valuation approach, a specific way to estimate a value. That means there are various methods are there. Even your international valuation standard, they specify only few methods. So let us not jump to conclusion that these are the only methods. For example, 210, that is intangible asset. In income approach, they will only say 5 methods. Is this the only 5 methods available? Not necessary. As of today, the standard has recognized 5 methods. Any one you can adopt. If there are 6th method and you can justify that method is best for that situation, go for it. Maybe the standard has not vouched that method, but that will come under a specific way to estimate a value. So every time when they explain a method, they always make it a point that these are only illustrative, not exhaustive, for your information. Okay. Now, worth. Investment value is always called as worth. This is actually new definition, 20.33. So, is it investment value or worth? Both are same. And investment value is also defined in para 60. So, this is your new changes with respect to glossary. Now, I'll take you to IVS framework. In IVS framework, is there any change? Actually, no change except 2 paras. They've inserted 2 paras. What are those 2 paras? 10.2 and 10.3. If you look at this is your 2020. So in 2020, please look at it. This is your framework. Only 10.1 is there. 10.2 and 10.3 is not there. Okay. So what is your 10.2 and 10.3? So this para number 10 is with respect to compliance with standards. Actually, very, very important. Okay. Compliance with standards. And for your information, guys, nowadays, every regulator, every authority, they wish to see in the valuation report, are you following standards? Whether the regulator knows standards or not is different, but they expect the valuer to follow the standard. Okay. So therefore, this para number 10.2 is a very important para. What is it? In order for a valuation to be compliant, the valuer must remember this word. Actually, I used to say this word, 3 words are very important words. What is it? The word called must. The word called, I will just take you to the definition. Okay. I'll call this as 3 musketeers. Okay. So what is it? Must, may. Okay. So, and one more word is there, and that is the word called should. The word is called should. So certain places should will be there. Certain places must will be there. Should means, I always say, should means an alternative actions are followed. You have to follow. You have to follow. This is mandatory. Should means mandatory. Now, always men, they if you ask any men, married men, whether it is wife or ma, So who is which you will give more weightage, to whose words you will give more weightage, it is always difficult. Okay, so therefore I always say is must or should. Okay, is I will connect this must with what wife says, should what ma says. Okay, ma will say, okay, go to market and bring bendi. Okay, what is called as lady's finger. Okay. Now you go to market, lady's finger is not there. So what do you do? So 1 kilo instead of lady's finger, you buy brinjal, baingan you buy. So alternative, valuer must comply unless valuer demonstrate alternative actions. You go to ma, lady's finger was not available, so I brought baingan. You are very good in making baingan fry and that kurma and all. So you make it. So you actually convince. So demonstrate that baingan is enough. But that is should. So you have to say why you have not followed method 1, why you have followed method 2, why you are that 5 methods you have not followed, you have brought a 6th method. Alternative action, which you have to convince. Must means unconditional responsibility. Lady's finger, 1 kilo means go to market. Not available, go to second market. Not available, go to third market. Otherwise, go to next city, next town. Take a flight, a train, go buy and then come back. So that is must. You cannot say no to it. So that is why please come to this para number 10.2. In order for valuation to be compliant with IVS, valuer must comply with all the requirement contained with IVS. No departure. Actually, departure is possible. And they are giving one paragraph. That paragraph is here, departure. And remember, it is called LRA. LRA alone you can depart. What is LRA? Legislative, regulatory, authoritative requirement. What is legislative? The Income Tax Act, they prescribe net asset value. But where is net asset value in the international valuation standard? Nowhere. Net asset values, asset minus liability is net asset. Now, is it cost approach? Not necessary. Okay, it is book value. Is book value is a value? Anywhere they have discussed book value. We have seen synergistic value. We have seen liquidation value. We are seeing fair market value. Where is book value? Book value is not a concept discussed in international valuation standard. Okay, even in ICA valuation standard, this is your ICA valuation standard. Have they discussed anything about book value? Okay, no. They also not discuss book value. So book value will form part of your cost approach, because cost approach always they say these are the methods and that method is also illustrated, not exhaustive. So one of the cost approach you can call, one of the method in cost approach you can call it as book value method or net asset value method. That's it. But because these are depreciated values will be there. Is it cost? Is it replacement cost? Is it reproduction cost? Or summation cost? No, it is none of these three. It is a fourth method. So therefore, guys, please look at this. Only LRA, the departure is possible. So otherwise, you have to go by the prescription of. Otherwise, don't say in your report that it is no. Out of 17 paragraph what I have mentioned, only 4 paragraphs complies with IVS, remaining it doesn't comply. You cannot say that. Partly complying, partly not complying, not. Either you say I am married or you say I am not married. You cannot say I am partly married, partly unmarried. That is not possible. Okay, good. Now come to 10.3. A valuer can only depart from IVS as described in section 60. I mean, that section 60 is your this part. And I want to make one observation here. There is maybe a correction we need to understand. These are called as paragraphs here, 10, 20, 30, 40, 50, 60. But here they mention it as a section. Technically, 10, 20, 30, 40, 50, 60 is section. 10.1, 10.2, 10.3 is called paragraph. Okay, so that is what you need to understand. So section and paragraph. So here they say paragraphs, here they say section, don't. So they mean like that. Maybe they have to In the next edition, they will change this paragraph to section. I've already written to IVSC Council. These are certain places where you need to make a small addition. This is one particular point they have to make an addition. So this is with respect to 10.2 and 10.3. Now come to the 101. So we have the last 15 minutes. I will take another two very important points. Okay. So one is 10.1. Okay. Which is compliance with the standards. Second, 10.2, departure is possible only as per section 60. Okay. Other is called para 60. Good. Now, 101, for your information, no change. No change. Para to para, it is same. Para to para, nothing. Comma, semicolon, full stop, everything is same. So, IVS 101, scope, no change. Okay. But IVS 102, is there any change in IVS 102? For your information, IVS 102, investigation compliance, no change. Wow. So, out of your 101 and 102, no change. So, compared with 2020 and 2022, same. Good. Come to 103. Yes. Very, very important. There is a change. Reporting. So, in IVS 103, reporting, there is a change. Now, what is the change? Change is very interesting, guys. Actually, 10, 20, no change. But come to 30, valuation report. I believe they have matured. This is one place where I have to give you what happened in IVS 2020, what happened in IVS 2022, what happened in ICAI valuation standard. Okay. And ICA valuation standard, I have to take you that paragraph also. This is your ICA valuation standard with respect to reporting. Okay. So with respect to reporting is 202. Okay. So let me take you to 202 also. So that this is your so 202 is your reports, and this is your 202. In that contents is the contents of the valuation. This is the contents. So let me keep this content here. I'll keep the IBVA content also here. Okay. I will keep the international valuation standard 2020 content also here. This is 101. This is 102. This is your 103 content. This is your 2022 content. Now, please look at 2020 content. A, B, C, D, E, F, G, H. Only 8 paras. Okay. Now, come to 2022. A, B, C, D, E, F, G, H, I, J. So 10 paras. Wow. So what is added? What is added is your C and D. Who are the intended users? What is the intended use? Okay. Intended users and the purpose. These two was missing in the international value. Intended users there. Who are the users? What is the purpose? But actually, in your scope, they are very clearly mentioned. Purpose should be there. You need to give the purpose, because please go to 101. This is 101. In 101 F, please look at F. Purpose of the valuation. This you have to mention in scope. Then if you are mentioning in scope, then why you are missing it in the report? And every standard, they explain about this purpose, but they have not mentioned it in the 2020 report. So 2022, they have made it very clear. So purpose, the intended users. Now, very important. Now, intended users, can you say everybody can use? No. Who has appointed you? For example, if it is a company, board will appoint you. You are addressing the report to whom? To the board of directors. Then who will use it? The board members only. Can you say it can be distributed to shareholders? No, you cannot say it. No, to the shareholder. It is not an audit report. Okay, so please understand this particular point. So these are the two paragraphs they have added. Now I want to make one more observation here. Now here, your ICA valuation standard speaks about 13 paras. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Wow. So I will say your ICA valuation standards are more superior. But one thing I will claim, here also they say shall report minimum. So that means this 13 paras are only minimum. Even international valuation standard also say must convey at the minimum. So these 10 paras are only minimum. Okay. So then come to IBBI. What is your IBBI? Very clearly says this is actually 17 paras. Background, purpose, base, premise, identity, intended users. See, everything is there. So I will say IBBI is comprehensive. 17 paras. Very important. So please look at this. Considering the interest of the stakeholders, so I will say, if you follow IBBI, you are following IVS. If you follow IBBI, you are following ICA valuation standard. Okay. Now, I will follow only international valuation standard. Then you are, that means only I am giving 10 paras. 7 paras you are missing. 7 paras you are missing as per the requisition of, as per the prescription of IBBI. This is actually a guideline. This is actually a guideline. Very important guideline. And for your information, they have made bases and premises as two separate things. What is your base? Give very clearly. Liquidation value means what is liquidation value? Why you are taking liquidation value? Fair value, why you are giving fair value? Is it a financial reporting purpose you are doing valuation? Transaction purpose you are doing valuation. If it is transaction purpose valuation, maybe you have to go for investment value, or maybe you have to go for fair market value, or maybe you have to go for a market value. Okay, you have to explain very clearly. So that is why the purpose is first, base is next to premise. That is why even before IBBA brought this, I used to mention this in my various lecture. Purpose first, base next, premise third. And they have confirmed it. IBBA has confirmed it. Then only your methods and all are coming. Please look at this. So, nature, procedures adopted, valuation standards followed. Okay. So, which standard? You can even say European valuation standard you are following, because nowhere India, whether my MCA says you have to follow only so and so standard. No. They only say internationally best standards. So international best standard, you can follow anything. European standard also you can follow. American standard you can follow. You can follow the UK standard. You can follow Indian standard, ICA valuation standard also. Nothing wrong. But you have to mention procedure adopted and carrying out. So today we are in a transition stage. From cycle, we are moving to two-wheeler. From two-wheeler, we have to go to car. From car, we have to go to maybe luxury car. So we are waiting for the valuer's bill. Until such time, these things will be there. Okay, good. Now this is very interesting. So look at this. So I was in this part. So J, 10 paragraph. All the other things are there. Nothing changed. Para 30.2, 40 point, nothing changed. Okay, good. Now come to 104. IVS 104. In IVS 104, is there any change? Maybe with this, I will close my session. There are, of course, with respect to the asset standards, in 200, no change. 210, no change. 220, no change. 230, Entire standard is new. So in asset standard, they have not brought any change. Even 500 financial instruments, no change. Okay. So I'm not going to comment about the property as well as plant and machinery. I'm not the guy to comment about 300, 400 and 410. So, but I will comment about 200, 210, 200, no change, 210, no change, 220, no change, 230, inserted, entire standard is inserted. So I will request the RVO, ACVA RVO to conduct a separate session on 230 alone. Okay, separately. Financial instruments, no change. Coming to basis of value, 104, no change, but they have introduced new para, 220. Because in 2020, only 210 was there. Look at this, only up to 210, transaction cost. So all things are same. Word by word, full stop by full stop, comma, everything is same. Everything is same. No change. Okay. Including font size. Arial font only they have used. Font number, if I'm right, 12 or 12.5 they have used. That is also same. Nothing they have changed. But 220. So this is with respect to basis. So value. Okay. Para 220. Now what is 220? Entire para is new. So I'll take you to entire paragraph 220. Very interesting paragraph, guys. Okay. You need to understand this allocation of value 220. What is this? Why they have brought this particular paragraph? I'll call it a section. Section 220, para 220.1 and 220.2. Allocation of value. Allocation of value is separate apportionment of value of an asset on the individual or component basis. Okay, individual or component basis. See, interesting. I will just give the example from plant and machinery perspective. Okay, plant and machinery perspective. Say there is a aircraft that has been valued. So 7 numbers of aircraft is valued. Each one is different. So if a plant and machinery value is asked for, I will take the help of an aeronautical engineer also and I will give. And all of you know the usage life of the frame of an aircraft and the engine, both are different. Engine is the main component. So engine have a different, so allocation, it is not apportionment. Please understand. In costing, maybe in, I will call it as 4A. Okay. Ascertainment of cost means you have to first direct, what do you call it as allocation. What is called direct allocation? So-and-so cost is for this. That is why it is called allocation. They don't use the word apportionment. You are not using ratios. Please understand. It is not ratios. Ratio means apportionment. So 2:1. Total value 70 crores is the value of an aircraft. 2 is for machine. I mean engine. 1 is for what do you call as the frame. No, it is not like that. You are not apportioning. Allocation is the separate apportionment. So they use the word apportionment on individual basis or component basis. So how do you do it? Maybe sometimes you will go by some logic, some light points. You will go by original value. What is the original cost of the frame, original cost of the machinery? Now what is the value today? Based on that, I am going to apportion. So you are allocating, but you apply some ratios. So what is that? When apportioning, okay, the paragraph is not apportionment of value, it is only allocation. Okay, while apportioning, but you can use arithmetic there. So that is what standard says. The allocation method must be consistency. 1:1. I'll divide half and half. No, what is that half and half? You have to give an explanation with the overall valuation premise basis, and the valuer must follow applicable legal and regulatory requirements, if any. For example, if you are doing the valuation of a coal, the coal will have various, what do you call it as the calorific value, some calorific value and this calorific value. Now, how will you measure that? So there will be 7-10 heaps will be there. So therefore, you do the testing and then you try to say, okay, keep number 1 and 2 as a different higher calorific value, this has a different calorific value, so value will be different. So you go by some logic. So that is most important. That nobody can question the valuer. You have to come out with that logic because you are the king there. You are set out a clear and accurate description of the purpose and intended use. Consider the facts and circumstances, please, such as relevant character being apportioned. And adopt appropriate methodology in the circumstances. You give the methodology. And nobody is going to question you. But you cannot say no there, because buyer will be two types of buyer. One buyer will say, no, aircraft I will give more, the frame, it is only a depreciable, I have to actually remove it and then do it. So frame I will give a different value. For the engine I will give a different price. So engine price are non-negotiable, frame price are negotiable. So all this will happen when you do the real business transaction. So that is why this allocation of value, the client will actually make it very clear. No, I don't want only the aircraft value. I need value for these components also, especially when you do the valuation of large factories. Okay, guys, I must thank each and every one of you for being very patient, and also special thanks to ACVA RVO. Any questions are welcome. We have the last 2 minutes.
Every valuation report we should mention the IVS standard. So going onward, like 1st January onwards, we have to mention this standard, right? Not the old one.
No, nowhere it specifies that you should only go by 2022 standards. Which law says? Nowhere. You even go by 2020 standard also. But you mention very clearly IVS standard. If you leave it very open, it means you are following 2022. So you mention it very clearly. It is IVS 2020 only. So if you are not mentioning the year, it means 2020.
So this will be effective for the valuation reports issued from now on after 22.
Exactly.
So we cannot override ICAI with IVS. So I'm following ICAI valuation standards being Indian valuer. So IVS may not be applicable, or it is optional. So from now on, it is not optional because it is the must word which is used.
Exactly. Okay. You have to very clearly mention. Now, if I am a member of ICA RVO, I am obligated to use ICA valuation standards. I have to follow. But if I am not a member of ICA RVO, I am not obligated to follow ICA valuation standards. Because the respective, we have 16, what do you call, valuation organizations, 16 RVOs. Tell me which RVOs brought out a standard? No, except ICA RVO. Nobody has brought. So, except ICA RVO members, other 15 RVO members, which standard they will follow? So they can follow IVS.
How about a chartered accountant who is some other RVO member?
That is what I'm saying. So you are only giving a valuation report under IBBI as a registered valuer. So why should I follow ICA valuation standards? But you are giving a report as a chartered accountant under FEMA or under Income Tax Act. You have to follow ICA valuation standards. So guys, thank you very much.
1 second. I'll request Kaushik to extend a formal vote of thanks to today's speaker. Since this is a filing time, we have not extended the session for 2 hours. We have just kept it for 1 hour. Over to you, Kaushik.
So thank you, Shilpa, for giving me the opportunity to present the vote of thanks to the esteemed speaker, Dr. Gopala Krishna Raju. So it's my pleasure to present this vote of thanks before you, sir. So just to summarize, or just to say that we have taken a lot of takeaways from this session, starting from the background of the committee and the literature comparison with respect to the DESI style of valuation standards with ICAI and the IVS. So it was been dissected by you very clearly and very neatly, and making it simpler to all of us. And definitely there are a lot of things to minutely look into it with respect to each of the words like competency, skill, experience. So the difference between the words used in IBS and the ICAI or the regular guidelines. So these are the things which will help us to get more clarity, though we would have been doing all of this with a small assumption or with a small kind of practice discussions that we do it in a day-to-day based on discussions with different valuers. Now that this will give an emphasis in our mindset to frame a thought process and frame an informed opinion, and also letting us know about the 230 inventory professional opportunities that are there with respect to the valuation of inventory. And like small aspects like the words being defined, must, should, worth, but all of this will make a significant difference while framing an opinion. And thank you very much, sir, for bringing the definitions like the y-axis, x-axis, the glossary framework. So it was a very good information and also comparison. It was in simple words, I can tell an Excel will give a number VLOOKUP. Today, sir has given us the VLOOKUP between the different four set of documents, that is 2017 IVS, 2020 IVS, 2022 IVS, ICAI evaluation standards vis-a-vis the IBBA guidelines. So with this, I think I thank you, sir, for your time and sharing this information. I also thank ACVA RVO and Bangalore Valuers Association for arranging this session, and also all the participants who have joined on time and enriched their knowledge with this important session. Thank you all. Thank you, sir.
Thank you all.
Thank you, sir.
Thank you.